What's up, traders? Just wanted to record a quick recap here. It's Thursday, the 28th of April, after what has been going into the close here and what has been a pretty astounding session from a Confluence perspective. The fact is that there is a science to modern markets. With all the noise out there about this sort of thing and all the predictive prognosticating, all that stuff, there is a signal strength behind the noise, and institutions obviously presumably are using it, and we do have access to it as retail traders. It just takes an enormous amount of study and testing and so forth, but that you do arrive at a place where there can be said observably and provably to be a science to some of this stuff, and I hope to spend maybe about 5 or 6 minutes here showing it. So coming into the day, just to paint context here, coming into this week, but this session in particular, the April 28th, we are in a corrective market. The market is down, many days in a row or many weeks in a row, and we are coming into things just really simply here, looking at the SPY S&P 500, down in a corrective decline since the all-time high made in December, and into, as of yesterday, into the close. We had a real weak close, but we were into this massive COVID era daily anchored VWAP. That's anchored from a corrective low in September, something that held in late February and twice in March, and just closing on that yesterday's session, right? QQQ from the COVID day VWAP, not an upper COVID era day VWAP, but the daily anchored VWAP from the COVID low, March 2020 low, something we held before in March, and closing on it in yesterday's session. Semiconductors look exactly the same, closing well below it yesterday. I say well, a little bit below it, but that is the higher time frame COVID daily anchored VWAP, and we got quite a bit below it yesterday and closed kind of right on it. And then DIA, not at a daily anchored VWAP, but this is the Dow Diamonds, obviously at a massive higher time frame level into the closes really of the last two sessions. This is a former all-time high that went on to become two really critical successive swing lows. We're also in the context of what we call symmetrical extremes. Some of you may not be familiar with this tool. It doesn't matter. This is the highest resonance or highest strength tool in our toolbox. It's something that you can go back and look at decades and decades worth of just absolutely massive responses. There's something extraordinarily scientific about this. This Apple first symmetrical extreme tier, about 5.4% below the 20-day exponential moving average, was closed on the last couple of days. We'll go into the response we had from it today with a massive update. QQQ, obviously the NASDAQ 100, the biggest tech stocks, the most important tech stocks in the NASDAQ, at its symmetrical extreme tier, the second of the 20 EMA and the first of the 50 EMA, closing the last 2 days on those values and ripping today. XLC, these go back decades. Apple and QQQ, they go back decades. They go back to the 90s. I did a presentation on this in Vegas at late last year. So these are 30 years old or something. XLC is a new instrument, right? It's a younger one, so this doesn't have quite as much clout, but it's closed the last 2 days with all that higher time frame signaling I was just talking about at these symmetrical extreme values. They've only been visited 3 times before in the case of the 20, twice before in the 50 EMA, but it's still pretty staggeringly precise. Again, young there, not like the Apple ones or the QQQs, which you could literally go back and test for 30 years. Yeah, 30 years. It sounds even weird to say, but it's there. XLK, same thing, going back decades. You can see the last couple of days on this first symmetrical extreme tier on both the 20 and the 50. KRE, you heard, or you will hear, rather, in a second, I'm going to play some clips from our pre-market prep, but you'll hear Dave, my mentor, our head trader, go into the symmetrical extremes that are present in the main financial instruments that we watch. So XLF, the financials ETF, KRE and KBE, the regional and local bank ETFs, all 3 of them in symmetrical extremes. XLF had just missed its 20, but was in the 50 symmetrical extreme, and you can see here KRE, regional banking, really critical in its symmetrical extreme, full symmetrical extreme there with both the 20 and the 50. So that's the higher time frame context coming into today. Massive higher time frame reference points in the 4 major modern American indices with symmetrical extremes. So what happened overnight is, so we closed that yesterday and we had a real weak close, and then overnight we have this pretty big gap up. We have this signal resolution from the week close, but on higher time frame levels yesterday. We drift up overnight and then we pull back, and so we have a decision to make, and that is a big higher low type of decisions. And I'm going to play some clips here from our pre-market prep like I mentioned, but so we have this big higher time frame signaling, real simple technical analysis stuff, real big higher time frame signaling yesterday. We come up, we gap up. So when we're coming down here, it's all about, is there a high probability driven, evidence driven chance to make a higher low? Because as you know, even a beginning technical analyst knows, if we don't make a higher low, then what's very logical is either we're going to retest or we're going to go to fresh new levels, either to like a divergence below a recent low or just straight up new lows, like some straight up further bloodbath. So it always becomes about, after higher time frame signaling, a response overnight, a gap up, and a pull back. Where can we identify key probability driven zones for a potential higher low? Who knows what the market's going to do? You don't. Even if you think you do, you don't. If you think you don't, congrats. No one really does. But we can get really high probability, evidence drenched reasons to suspect this is where a higher low might occur. So I'm going to play some clips here from Dave identifying these zones, which were, I'll show you, so it's not just you believing me, but identifying these zones in ES and in Q with those daily anchored VWAPs we just covered, retested from above, identifying these, and then the response that played out throughout the ecosystem. So here you go.
Getting into ES, outside levels, not a whole lot of changes, just mostly tightening stuff up. I did have a middle level. It was daily pivot point, WS1. But I mean, it's just kind of look at it. Daily pivot point, then you have a supply and demand, then you have a WS1, then you have a SPY daily anchored VWAP at a gap fill, and then you have an important higher low. If I was picking any of them, I'd probably pick this, but I had it drawn here. But, so big level, high time frame level, higher low level, held. Big level down here. This higher low probably is the most important thing, but I just don't want to draw a level there because it could be wider. I'm just going to wait for Confluence to come in there. The information's on the chart, SPY daily anchored VWAP, ES daily anchored VWAP, all that good stuff. Moving on to NQ. I guess I left an NQ inside, but I'm going to delete that one as well. Again, it's just sort of the same thing. It's a nice level and it's a quarterly pivot, but again, look what's right below. You have a daily pivot point. Below that, you have the QQQ daily anchor VWAP. Below that, you have the WS1. Below that, you have the current swing lows with a gap fill. There's just so much shit in here. It's all just in the middle. It's just, don't want to get anybody focused on one specific area. It's just looking at all the information, all the indices, and breadth if price comes back down in here. But realistically, again, it's the prior absolute swing low all the way up to the current swing low. I just didn't widen it out, but this area in here is very, very important for an equal low or a higher low. So we're working on a bottom. We just don't know exactly what it is, and we have an event that we can't control, and whatever the market wants to do, it's going to do when Amazon and Apple report. I don't think anybody knew what Facebook was going to do. So and don't forget, it's not just an NQ market. I mean, financials, buy-side symmetrical extreme, XLF, KRE, KBE, buy-side symmetrical extreme. Now we're into RTY, which those affect it deeply. Biotechs, deeply, deeply oversold. IWM at key levels. Most of the currencies in buy-side or sell-side symmetrical extremes. There's just so many things going on right now. Semis, just everything, it seems like. So a pretty important time in all of the markets, not just the NASDAQ, but the NASDAQ, especially the two, the biggest company in the world reports tonight, and one of the top two or three companies report. So pretty big night on that front. So getting into RTY, a lot of this stuff is in the middle. You have rejections here, you have support here. A lot of this stuff is very in the middle. So we start clearing and take out this, you think it has a shot to get up to here. We're collecting full ADRs up here at MS1, and that goes the same for all these indices. I mean, we start breaking above these liquidation days. You can liquidate back to the other side real quick. So going to be a little more cautious in here. Again, we're looking for a bottom, but just try to look at this stuff on the bigger picture and just be careful in the middle. Pick your spots if you're trying to get a higher low. Don't have 15 of them and get run over if the thing retraces all day long. Just pick one or two and stick with them.
Okay. So here we come down. You can see this is this is the gap up. Here's the RTH session beginning, the gap up. You can see here we pull back into these zones that you just heard Dave talk about. These are the daily anchored VWAP zones from above. Yeah, you look here, it's WS1, supply and demand, and it's a trend line. you'll have less than really high octane market participants go back and think very highly of trend lines because of this, or go back and think very highly of WS1 because of this. There's an enormous amount more going on. There's really two key Confluence timing windows I want you guys to check out today. There was an 11:45 Eastern, or a 10:45 Eastern, excuse me, and then a noon. So what happened was you had this enormously powerful 10:45 a.m. signaling Eastern time where everything came into these key outside levels. And then later on you had a really powerful signal at around noon where two things happened. The weakest things in the ecosystem, the financials, Tesla, and biotech, came in and added fresh new premium outside levels below, while the strongest things in the ecosystem, things like MAGA and tech, held key, visible in advance, no BS, no hindsight zones from above. We call these like continuation levels, or continuation levels, or higher low cont spots, however you want to call that. All of that happened at the same time. So big outside signaling with all the higher time frame reference points we just talked about at 10:45, and then sort of a continuation in the strength at around noon with key things like XBI, ARK, Tesla, which owns a ton of Tesla, all collecting premium levels and/or further symmetrical extremes that didn't collect before. So here's, just to get a sense of that, here's those higher time frame daily anchored VWAPs I just showed you on the other charts. So that's how we're opening. We pull back. Coming into that 9:45 signal, this is those zones as we come in. This is going to be an enormous hold spot here. You can see the prep zones. And this is where we get all of these holds right here. So let me call that chart back up. You can see there on the prep chart, it's written in text that with the daily anchored VWAP, but I just want to show you. So at today's lows on that 10:45 signaling, there's the SPY low. It's that higher time frame reference point, right? But we come down right on top of it at the low today at that signal, right? Or I've drawn here. This was, so you can draw. I've drawn here in advance. This is drawing the next 30-minute bar on that level, on that prep zone. That's that daily anchored VWAP, right? QQQ. We close on it yesterday. Gap up. You can see the low there with everything else Dave just talked about in that clip. You can see that daily anchored VWAP. SMH, same thing. And sure is ugly. Yesterday we closed below it, but we gap up, come down. Where do we test from above? With levels, with what we call surf. It was also just below a really key trend guide and quarterly pivot point. That's that daily anchor view up to the tick. Same thing with the Dow here. It doesn't have a daily anchor view up, or at least I don't have it drawn. It may well. Let's just throw some on from, not really below that one, see? But look at this level. It's a former all-time high from March of 2021. That's a year after the COVID crisis, and then two successive massive swing lows. Come up, gap up, test the upper end of that zone. Oh, it's all of that happening at that time right here. 10:45 Eastern. You'll notice my chart say 9:45. I'm in Central. This is 10:45 Eastern, trying to make the time zones right for everyone. This is 10:45 when all those daily higher time frame reference points are hit, and then we'll go back later and see 11 a.m. my time, or noon Eastern is when a whole bunch of other stuff, amazing stuff happens. It's also little things like intraday anchored VWAP for ES with, you can see over here, it's session VWAP to session RTH VWAP, and what we call surf is just a 20 EMA on the 5-minute, who cares? But there's an enormous amount of stuff going on right there, as well as this little higher low in ES. So just running through some of that stuff. So here's me drawing that next 30-minute bar. This bar here is what ends up being this large black bar on the 30-minute here. And then you can see that next bar wicks that higher time frame reference point and everything, just as you've drawn here. Continuing on, trying not to get too biased, but MS1 and or the swing anchor VWAP channel trend line above is very possible. Now, who cares about calls? Who cares about Tim? It's not about that, but it is pretty amazing that the lens of Confluence from 4185 can point to not only 4240, obviously, which is 65 points higher, or 55 points higher, whatever that is, but can also potentially point to swing anchored VWAP in the channel trend line, which is, damn near 100 points higher. Ultimately, we went 120 points higher, and we highly suspect this rally has quite a bit more in it, although we are responding to a very clear decision point there from below. Same time, we just talked about this, that higher time frame dia level, same thing. Gap up, pull back into that 10:45, that first of the two Confluence timing windows held. right? That same thing. So DIA, what's it composed of? Dow Diamonds. It's got three major components in it. It's got industrials, healthcare, and financials. So we'll talk about all those three. We'll talk about healthcare, but what's part of DIA is the XLI. So XLI is trend guide reversal in the prior day's lows. Looks like some nice ADR support there as well. So same time, that 1045 outside confluence signaling, XLI helping DIA there. Same thing, a bunch of stuff in tech held levels. So we have the NIFANG, which is the FANG instruments, Facebook, Amazon, Netflix, Google, and so forth, holding this gap to surf. And a lot of things in that ecosystem at this time were holding really key reference point. XLK, which is a bunch of those key tech stocks, holding this daily R1. We call this trend guidance really meaningful on a gap up. It's testably very meaningful on a gap up with the prior day's high, right? Comp, the NASDAQ composite, which is the bigger NASDAQ with a bunch of crap in it, basically, not the NASDAQ 100, holding this inside cluster you can see on the top of a higher time frame supply and demand zone. Let's look at MAGA really quick. Some epic stuff going on. Same time, that 10:45, 9:45 my time, 10:45 market time. Look at Amazon, prior day's high, basically QS1, MS1, and this surf again, holding that gap to surf, as you just saw Cesar mention. This Apple was something we looked at pre-market. I don't think I kept a screenshot of me showing it pre-market, but this is this blue dotted line is the 200 simple moving average. It's trend guide, it's annual pivot point, it's WS1, all with that surf as well. It's the same zone that's been so pivotal the last three sessions. Monday's lows, Tuesday's lows before we broke down. All of yesterday's highs, basically, that we gap up and we hold that gap side trend guide with that block. That's all that same time, 10:45. So just some massive stuff going on, as well as, remember, these big higher time frame daily anchored VWAPs and that big higher time frame level in DIA all holding their XLI. That's all of tech holding that same time. MDY, this is mid caps. They have a huge correlation to small caps. They're like 95% correlated or something. So you can see at that same time, that same round of signaling, RTY came down into its daily S1. This blue zone is done in advance. It's a prep zone, as we call it. Huge zone in the Russell 2000. MDY mid caps, which are hugely correlated to that, coming into this level. This is, look at the time, coming into that 10:45 time. Here is MDY, or excuse me, that's 9:45. This would have been after. This would have been after that or around that same time. MDY coming, doesn't quite get to this massive higher time frame zone, which was a former all-time high and 3 swing lows since, but it does get to that daily S1, kind of a similar look to XLI there. It does get to the daily S1 at the top of that. Okay, now let's look at, now we're coming into this noon Eastern, 11 a.m. our time in Central. Our chat is Central. We have these 3 parts of the ecosystem that are the weakest. We have financials, we have ARK-K, the ARK stuff, the innovation, which has a huge component of Tesla. Almost all of the ARK funds own a ton of Tesla, and then Tesla. So these are the huge weak parts of the market, as ES and NQ, the strong parts of the market, make these higher lows on these big reference points here and here. And RTY making a higher low too. You have many things in that strength cohort of the markets making a higher low at key levels, but then you also have a ton of weak things adding new fresh evidence, adding new premium outside levels, all at the same time, again around noon. So let's take a look at that. ARK-K adding full ADRs, QS1, WS2. This is a huge, what we call a Brink cluster. There's just very, very little going on below that for a long time. SARK is an instrument used to short ARK. It's an inverse ARKK. It had full ADRs with an annual pivot point, which is huge. Notice there's no annual pivot point in ARK itself, so that's a massive piece of added confluence. XBI, massive multi-month trend line at the bottom of a higher time frame supply and demand. I believe that's full ADRs, or it's full ADRs in LABU, which is a leveraged ETF that trades with XBI. XLF, mentioning the retest. You heard Dave in the clips talk about the symmetrical extreme that's present in these, so that's active in the background, an incredibly powerful higher time frame reference point active in the background, and that's all talked about here real time. This is that level in the financials. It's a former all-time high, prior swing low, prior swing low. That's all the last 3 days with a symmetrical extreme. Remember, XLF didn't hit its 20 symmetrical extreme, but it's in the 50 symmetrical extreme. Let's see if I can call that up. If the chart of that lying around somewhere here. I can't find it right now, but yes, I can. Here's XLF in its 50 symmetrical extreme. All the last few days digesting that higher time frame reference point there. So let's get back to where we were. Financials retesting higher time frame reference point. This huge all-time high, former all-time high supply and demand zone that's been many lows going back to 2021 in the symmetrical extreme I just told you about. Here we are talking about that in real time with the other YM stuff. Remember, the Dow Diamonds is financials and industrials. Talking about that. Notice the time, 12:15. That's as that second part is resolving. Other weak parts of the market, the ARK-K, the ARK funds, ARK Innovation, and the XBI, right? Talking about that in real time. Here's ARK-K, WS2, QS1, darn near full ADRs. Look, it adds a symmetrical extreme. So unlike the other ones we've covered so far in this video, it hasn't been in a higher time frame reference point until just now. This is that 11 a.m. hour time noon reference point. It adds, the weakest part of the market adds a symmetrical extreme, full. Look at the 200, the 50, and the 20 on this divergence that adds a full symmetrical extreme as the other ones are already resolving it and making higher lows. XBI, same thing, it adds, not full, the 50 is not quite there, but a beautiful 21. Look how many times it's mattered. Look at the huge rips it's caused. Right at the lower end of the higher time frame supply and demand. Notice the time, 11 a.m. hour time, noon Eastern, right? And lastly, LABU adding full ADRs. LABU and XBI is just a leverage vehicle to trade XBI, right? Here's the results from that. RK from that zone we just covered. Look at the ADRs ripping from that symmetrical extreme, level to level. That's a massive, massive move. It's just I don't even want to do the math. XBI from this higher time frame supply and demand zone, lower end of that. You saw us talk about that in real time somewhere back there. Massive rip. Let's do the math on that, 780 to 9. Do the math on that on a percentage basis, just huge. Tesla, this was a huge brink zone. So if you're looking at this, we talked about that. I think it was one of the screenshots. It's full ADRs, WS3. Nothing going on for like 30 points lower until this block held exactly where it needed to on full ADRs. I think there it is. Note the time, because we came into that a little earlier, around 9:40 Eastern, as part of that first signal. Then we retested, just like financials retested. As at that noon window, financials retested this zone. Tesla sort of retested it as well as one of the weakest parts of the market. It needed to hold there around that noon and rip. There's that talked about in real time. Tesla talked about it in real time. Notice the timestamp. And everything else in the ecosystem. Remember these things that it held. Remember SMH at lows here is that COVID daily anchored VWAP as part of that first round of signaling at 10:45 market, right? There's the noon round of signaling. So we just saw all the weakest parts of the market. ARK-K, XBI, and Tesla hold their key levels with added new symmetrical extremes at that noon hour, right? Well, if you look at the strength part of the ecosystem, there's a lot going on there in the strength. So while those three things make new premium pieces of evidence, Amazon retests the same cluster, right? Apple tests Surf after having departed from its massive block there. XLK tests Surf and trend guide in the prior day's high, right? It's that same prior day's high, trend guide, and Surf right there. That's that noon after holding Surf on the original signal. Comp here holds just below on the 1045. I'll move it up so you can see the 1045. And then at noon, when all the weakest stuff is making premium new information, you have a beautiful test from above here. What else is there? We saw the XLK, we saw the SMH, obviously we just covered. I'll get it on my actual chart though, just so you can see it. Same time, that noon, you can see this is when the weakest things are making getting those new pieces of evidence. SOX and SMH, the two leading semiconductor ETFs, high or low on QS1 and trend guide. That's that noon. So I hope that makes sense, guys, and pretty good Confluence recap of two major Confluence timing windows happening today in the context of and with meaningfully tactical hits of these higher time frame reference points. Again, the day's lows being those daily anchored VWAPs on that first round of signaling. So I hope that's coherent.